Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Mr. Dave Wolcott today. Dave started his career by serving in the country as a captain in the Marine Corps. Thank you, Dave, for your service, by the way.
You bet.
In 2000, he and his wife brought triplets into the world. Wow, which inspired him to challenge traditional financial planning advice. Today, Dave is an author, podcast host, and the founder and CEO of Pantheon Investments, and is more passionate than ever about helping entrepreneurs build wealth by passively investing in, of course, real estate and alternative assets that provide predictable cash flow, tax efficiency, and upside potential. So welcome, Dave.
How you doing, Alpesh? Grateful to be here and connect with you and your audience.
Oh, thank you. So we start with this question with every guest. Tell us something interesting or funny about yourself.
Well, there's two ends of the spectrum. You kind of talked about the a little bit in my bio. So, I mean, on one hand, when I was in the Marines, I was in combat and I was shot at. So that was kind of interesting experience. But probably more relevant for this is my wife and I actually had a toddler about 18 months, and then in October 2000, we actually had triplets. And, you know, I know everyone out there who's got young kids right now can, you know, really say like, wow, you know, we've got one and we're trying. I mean, we couldn't even figure out one, you know, at 18 months. And then it was like, I mean, this is something you read about in the newspaper, you read in the tabloids that someone's having triplets, and then it all of a sudden happened to us. So it's pretty crazy.
Wow. So you literally had your hands full.
Oh yes, it was zone defense at its best.
Oh, that's funny. But now they are grown up, I'm guessing, and they are doing well.
They are. My oldest is 24. She's getting married, and the triplets are 22. So it just changes, you know, each chapter brings about different changes. And so now I'm not paying for college, but I'm paying for a wedding this year, actually. So I have to stay busy.
Yeah, you need to figure out how to write off that wedding, right? This is what we entrepreneurs do. I had a business meeting there, right?
Yeah, I love it.
So what was your, and your story is amazing. You were in Marine Corps 2000, but what was your very first investment and how did it work out for you?
Yeah, so I mean, I'll just kind of back up a little bit from there. You know, after I transitioned from the Marines and I got into corporate America, I was actually in the tech industry my whole career for a while. And then, you know, back in 2000, like I said, when, you know, we literally quadrupled the size of our family, what was one of the first things I did? Well, it was going to talk to my financial planner and saying, hey, the goalpost just got moved way out further. So how am I literally going to, you know, handle this? Right. I mean, and you know, every planner that I talked to just kept telling me the same thing over and over. You know, the market will go up, it'll go down, just max out your 401k, you know, defer your taxes, dollar cost average, you know, all these things, you know. And the entrepreneur in me, I think, really just said, you know what, I'm asking a lot of questions here. There's got to be a better way. So this literally put me on a super trajectory to figure out how are the ultra wealthy really building their wealth, because it's not as a retail investor in the stock market. So I kind of set out on this really, you know, obsessive journey to really figure that out. So and keep in mind, this is like back in 2000. I mean, you know, Rich Dad, Poor Dad had just come out in the late 90s, right? There weren't podcasts, you know, that were out there, not many resources. And I figured out through networking and everything how to get into some private equity deals. even being non-accredited at the time. And so I guess my first deal was office. It was commercial office space in Dallas,
Oh,
Texas.
nice.
And shortly thereafter, you'll appreciate this as well. My partner, he was from Mumbai. And
Okay.
so we invested in the Indian stock market.
No way.
And I
No
can
way.
tell you, we thought it was a sure thing, and it did not go
It
well.
was, I
It
think
did not go well.
98 is when it started, yeah, the bubble burst, and it was for a while. Yeah, the Indian stock market struggle.
Yeah. So I spent really the next, 20 years like trying to figure out this, private equity game. And I learned about, everything from oil and gas to raw land, to retail, to multifamily, all of these different asset classes before, even syndications had kind of come out. And then, like I said, I was in the tech industry. So I started a tech consulting business. And we consulted for Fortune 500 government clients. But one of the things that I really learned there was that, taxes, it was partly about trying to figure out, what are the three biggest wealth destroyers, right? And it's
Right.
taxes, government sponsored qualified plans, and losses through the stock market over time. So I fired 5 different CPA firms over the course of the years, kept
Wow.
paying more and more and more.
Right. And yeah.
But we could never dial in on it and never, get to it until, I wish someone would have finally told me and said that, hey, look, it's this simple. If you're a business owner, you should be targeting to be paying 20% or less in taxes.
Right.
And if you're an investor, your target could be 0 in taxes,
Yes.
right? If someone just, and that's what I get really passionate about this, Alpesh, which I'm sure you can relate to, and trying to help out, other people just who haven't had this exposure or, don't have these, battle wounds that I have and going through all this, you can get there faster.
No, your story is amazing. And I was laughing because you have a head start of about 15 years from me, right? And I have a tech consulting business. That's what I started back in 2010. And that's when I realized I'm paying a lot of taxes.
Yes.
Right. So I went through the entire journey starting from 2011, and 2015 is when I realized real estate is the way to go. And since then, I have been investing in real estate and, of course, a lot of other alternative investments, including private equity. Right. So this is awesome. And you mentioned oil and gas. How did you get started with oil and gas? Like, what was
Yeah.
your first
So
investment?
Yeah, so literally back in the early 2000s, I had figured out how to do a self-directed IRA back then.
Nice.
And yeah,
Wow.
and I actually got into a self-directed IRA, got into a working interest in oil, and it's really a cash flow play. I mean,
Right.
traditionally, a lot of pension funds, right? They like these because they're an income play, and that's how you get it. But over the years, I really refined my investment thesis. And, instead of like the stock market, right, that has really a one-dimensional return. So if you have $1,000 of Amazon stock, that's all you have, and you're just hoping that the
That it
value
goes
can
up. Yes,
appreciate, right?
exactly.
But in alternative asset space, we're looking for assets that it's really the trifecta of investing, which is, we want tax efficiency, we want
Depreciation.
predictable passive income, and we want some kind of forced appreciation on the
Yes.
back end, because in that manner, you actually, you reduce your risk, right, at multiple levels, and you also increase your upside, right, at multiple different levels. So that was really our investment thesis. And so as I refined that, I stayed out of oil and gas, but probably about 2 years almost now, I had met through a family office mastermind, ultra high net worth group. I found this operator who is a 4th generation oil guy, and he actually, one of his best friends was a multifamily operator. So they learned basically to say, hey, we are going to drill for wells and capture, oil and gas. So you're going to get a tax benefit on the front end. They start production and they start paying cash flow within 60 days. So you start to get that revenue. So you're getting your cash flow there. But then very uniquely, what they do is they actually pool the assets together and then they sell them to another buyer. And this is really a huge innovation in the oil and gas market, and why a lot of our investors who've invested in real estate and everything, really like this model, because we really understand, how that works. And again, you really have three opportunities for upside.
Oh, that is interesting. And the main reason I looked at oil was because at that time I had my own consulting firm, and I was still a W-2 employee of my firm, right, to write off the taxes. So how can someone offset active income with oil and gas?
Yeah, so I'm sure your listeners are familiar on the commercial real estate side, right, with bonus depreciation and how that applies to. You have to think of income comes in different buckets, right? So in the passive income bucket, you've got passive losses, and so they offset there, right? On the active side, this works kind of similar, right? In that you would get back your K1 return, and it's going to show, your basis of your investment. Let's say you invest 100K into an opportunity. And then there's multiple different kind of components that go into the tax offset, but literally 100% of your investment is tax deductible. We're typically seeing about 80% in year one. And the remaining comes in the other years. And they're able to do that through, it's a combination of different tax incentives, something called intangible drilling costs, or IDCs. Some people have heard about. There's also something called depletion, which is kind of like depreciation, but since oil and gas is kind of a limited, right, has limited supply, you're taking it out of the ground, right? You get an offset for that. And I think this is an important distinction around taxes overall, Alpesh, is that you really need to make a paradigm shift. And, I think that there's just not enough education out there on taxes. People just kind of think of it as a penalty. But in reality, there's 6,000 pages of code, and 5,999 are all really a roadmap of incentives for business owners and investors. So you need to kind of change the paradigm and think about actually becoming a partner with the government. And so for oil and gas specifically, right, we have our national defense, right? I mean, it's completely strategic, right, to be able to have, if we go to war or anything, we've got to be able to, provide fuel and energy for that. It completely supports our GDP, right, in this country. It doesn't matter what industry that you're in, right? So that's why since the Reagan era, there have been some very strong tax incentives to invest in this asset class.
No, that makes sense. And I was laughing because I remember the exact same words came from Tom Wheelwright and his book, Tax-Free Wealth, right?
Awesome book.
That is what I read 4 years ago, and it opened my mind. I'm like, okay, it makes sense now.
But they should be teaching that in college, right? I mean,
that's
that's
so important.
Yeah.
And then we just sit here and complain that Trump did not pay any tax, or Ted Turner does not pay any tax, or Bill Gates is evading. But because they invest in real estate, because they invest in farmland, they know, or oil and gas, they know, how these tax laws work, right?
Yeah, exactly.
So, and I mentioned to you right before we started the podcast that I dabbled in oil and gas a couple of times. And, I like to mention it on the podcast also, that both the times I lost my money, right? And both the times it was drilling and somehow they couldn't find oil. So what are some of the ways, right? Means tax benefits are great, investing in oil and gas, because you can write off. But in the end, it's an investment. I still want to make money, or at least I don't want to lose my money.
Right.
What are some of the ways you can protect your principal while investing in oil and gas?
Yeah, no, great question. And I think, the industry has really evolved a lot over the years and things, but typically there was a lot more speculative type investments where it might be a single well
Yes.
type of operation, right? So people would say, hey, we're going to go and drill here, and it's going to be a home run, right? And we're going to go after it. And I think that's where most people have really lost, right? Because it was a single well. So if it comes up, you get a dry hole, you lose your money, right? So very speculative, right? In this case, I mean, a couple of things. One is that technology, and as a technologist yourself, you can appreciate this. It's come so much further. I mean, they can do 3D seismology reports and really understand, exactly kind of what's going on in particular formations, and know that, there is, oil to be captured, or gas, like in certain formations. It's kind of a matter of, okay, now how do you extract it, and then how do you optimize it? So we've, in the industry, that's referred to as PDP, which is proven developed production. Okay, so when we buy the land lease, we already know, we're already zeroing in on the fact that there is oil in a particular area. It's just a matter of, okay, now can we, like I said, access it and really optimize it? So we're kind of going after that PDP location. And then they also have proven undeveloped, or PUD, which is kind of areas that are adjacent to the PDP. Now, what's interesting as well that I've learned, as we were going through our significant due diligence on our operating partner, is that the banks actually do evaluation on this. So, much like you've got a, multifamily property, right, where the underwriter, the lender is, he's doing his appraisal, right? The bank is doing the same thing. They're actually looking at that PDP and PUD value, and they assign it and they lend off of that all day long, right? And if the bank is always the most conservative, lender in the capital stack, that really says a lot, right? And then we also have, in addition to that, we have third-party valuation reports as well, that are experts, similar to, again, an appraiser in the real estate side, that would go and actually value, what the land looks like.
Oh, that's interesting. And what are some of the, I think you kind of touched upon that, but what are some of the gotchas investors need to be aware of while investing in oil and gas?
Great question. Okay, so one that's really, new to people if they haven't invested in this asset class before, is the fact that in order to take the active losses, you actually would sign your subscription documents as a general partner, not a limited partner, and you have to do that in order to, get those active losses. Later on, probably, 12 to 18 months later, once the funds are actually all fully deployed into the wells, then everyone gets converted directly back into an LP position. Okay, so that gets automatically converted. Now, the next question you might ask is, you would say, okay, well, what about liability as a GP?
Right.
I want to be protected. I don't want any exposure. So what we do to mitigate that is, there is a $20 million insurance umbrella policy that covers for any type of mishap, environmental, anything that could potentially go wrong. And then we also insure each specific well for $5 million on top of that.
Oh, that's awesome. No, that's great. Also, I have heard about, so this is like investing in a number of wells, right? What about royalties? There is another way to invest in oil and gas using royalties, and do you get the same kind of active loss as well from royalties, or no?
Yeah, that is something, a model that we have not taken up yet, but there are some mineral rights.
Yes.
Exactly. It's mineral rights, and if you have access to the land, people are, getting paid off of that. I know some people who are doing, very well off of that. But yeah, I wouldn't be able to comment on that because we have not done our due diligence on that asset
That
type.
makes sense. And I can tell you have a lot of experience in alternative investments. What are some other investment ideas which will allow us to write off taxes?
I mean, this isn't a asset class particularly, Alpesh, but especially at the time of this recording, right? There's a lot of uncertainty out there. People might,
Yes.
not be sure of, hey, where to kind of put your capital. But we actually support, I've been using for over 10 years or almost 10 years now with my wife and I, the infinite banking type approach, right? Which is a cash value whole life
Whole life,
insurance
yeah.
policy. I know you're familiar with it, and
Yeah.
probably some of your listeners are. But it's really interesting. We've done. We're always trying to create value for our investors and provide different insights that you might not think of. But in that vehicle, it is after tax funds, but once your funds are in there, it completely compounds tax free,
Yes.
and you can give it to your heirs completely tax free. So I know a lot of us are trying to create legacy wealth, right? So
Yeah.
so it's a phenomenal vehicle, and this is why many of the ultra wealthy have kind of used this vehicle for many years. So we think that that is really, if you were to look at, the investing on a pyramid, like a wealth pyramid, really, the foundation should be something that has a lot of liquidity, tax efficiency to it, right? And that's where we see that whole life insurance
And
policy sitting on the bottom.
if I may add, sorry to interrupt, asset
Yeah,
protection as well, right? It's got inbuilt asset protection, and that's the key.
100%.
Ultra wealthy look for that, right? You want the solid tax-free income, as well as you want it to get protected for, or you want it to be protected from debtors, right?
Yeah. Yeah. And then just to add, I mean, what's kind of interesting, I mean, this is kind of a trick question. I don't really have the numbers here, but it's like, okay, if I was to ask you what's a better return, a 6% uninterrupted annual compounding over 20 years, that's tax free, uninterrupted tax free compounding, or 8% in the stock market,
Yeah, I think
right?
I'll go with one.
With the tax free.
All
Yeah,
day, yeah.
exactly. So that's what's really powerful is you have to think of an investment, and this is one of the traits of how ultra wealthy are investing, right? No one is panicking right now in the next 90 days. I have to sell this, I have to do that move, right? You're making investment decisions for actually the next 25 years that are going to go through multiple cycles, right? And also be more of that all weather kind of type portfolio. So, when you talk about, tax efficient vehicles, I just think, this is such a multiplier, right? You getting that tax efficiency, and you can do just so many things, and you have that liquidity, which is really powerful.
I agree. So let's talk about your investments, right? What has been your best investment so far in last 20 some years?
The investment in myself, quite honestly. You are your greatest asset, right? So
Right.
to the extent that you're investing in your health, in your mindset, in your relationships, in your family, in your spirituality, all of those things have provided the most significant ROI for me.
No, that I totally agree. That's great. What has been your worst investment so far then?
The Indian stock market.
Yeah. What did you learn from it?
I learned that actually there were a lot of tax implications too. Trying to
Oh,
get money in and
yes.
out, and then investing with somebody else, right? And basically you just get so many cuts out of the apple, right?
Yeah.
That it really impacts a lot. So I think, invest in things that you know and you understand. And if you don't understand them, right, not knowledge is power. So learn more, right? And that's why, there's great podcasts like this that, you can get educated about getting into, syndications in the alternative space. And essentially what we're trying to do is really bypass Wall Street so you can invest, directly with Main Street. And ultimately, I mean, I find that it's interesting because, most of these assets we're investing in, people who don't understand them say, oh, it sounds too risky to me. But in reality, the stock market is what's risky, right? I mean, you can flip a coin to see what the results are going to be at
Yeah.
any
It's
given
always
hour of the
50-50.
day, right? But, you invest into an apartment building and, people need a place to live, right? So it's something, that's very core. And we also, I mean, this is another lesson about investing, right? That's important is, we try to focus on that bottom level of Maslow's hierarchy, right? Food, shelter,
Yep.
and energy, right? So even think about oil and gas from that perspective and even the fundamentals, right? People might, like you said, you had some risky things, but think of the supply and demand. I
Right.
mean, I know globally the demand is just,
Right now,
completely
yes.
outpacing what we have.
So, and I'm glad that you mentioned about stock market. And every time I bring up this with a lot of my investors and friends, and most of them think that they can beat the stock market, right? They're like, oh, we never make it 10%. I'm averaging 20%. I'm like, look at it for over a 10-year period. Don't tell me what you made last year, right? You got to look at it 10-year period. And when I look back, because I started investing in stock market back in 2008 or 9, and I looked at my 10-year and it was like 7%, barely.
Yeah.
Even
Yeah.
though it was on fire between 2013 to 2016-ish. And then again, but overall, you have to look at the number. And if you are that good, you shouldn't be even working. You should be just focusing on stock trading.
Right. No, if you're a trader, that's a whole different animal,
Right.
right? But I think the majority of us are too
Yep.
busy raising families or they have a
Yes.
full-time job. And you're 100% right, is that, S&P past 20 years, you're, lucky if it's, 7,
Right.
whatever you want to call it, right? But here's the interesting thing that a lot of people aren't really realizing, and I think this is why, there really is a crisis in America, is that, these planners keep selling, these 401ks and IRAs
Yes.
because that's their agenda,
Yep.
right? They're building a business off of you. But what they fail to tell people is they don't talk about taxes and inflation,
Yes.
okay? And fees. So
Please, I
by
was
the
going there.
end of that 20-year period, or by the time, people start to withdraw their funds, and you're paying ordinary income tax rates on that 401k that you've been deferring the taxes, by the
Right.
way, every year.
Yep.
Just think about it. If you saved 4 million for retirement in your 401k, and then they'll tell you 4%, it's even less now, but 4% a year, your withdrawal. So that's 160k a year. And you might have thought, hey, I did pretty well. I mean, I socked away 4 million. I mean,
Right.
that's not too bad. But that's 160k. And then once you net out, taxes, fees, and inflation, it's probably closer to 100, 110k.
Right.
And I know you live in California, and
That's not
that
gonna do anything in
it's
20 years.
exactly. so so
So
you got to beat the system.
no, I agree. And I'm totally against 401k plans and all. I started doing that with my CPAs and I don't do it anymore because I don't want to kick the can down the road. I
Yeah.
want to get my money now and I want to have a control on my money. At least I can tell myself if I lose money or make money that it's me to blame, right? I don't want to pay someone 0.4%, 0.5% or whatever, even if they are losing money from my
Right.
portfolio, right? Because they still get paid. And that was baffling to me that as a syndicator and capital raiser, most of the time I don't get paid till my investors get paid, right?
Right.
But in the case of fund manager, they get paid, whatever happens with your money. So
Exactly. Even though the S&P is down 20% last year, they're still collecting fees.
yeah, you got to
Yeah.
pay 0.4, whatever, 0.5,
Yeah.
or yeah. So that's the interesting part. And the second thing, I'm glad that you mentioned about inflation, right? And a lot of time we have been told that when you kick the can down the road, you may be in lower income bracket. And that reminds me a quote from Rich Dad Poor Dad, right? Robert Kiyosaki. Why do you want me to be poor when I retire? I want to be rich now and I want to be wealthy when I'm poor. I mean, when I
Exactly.
retire, right?
Yeah.
Why
Yeah.
do you think that I should have less money than what I have now, right?
Right. Right. No, it's a
So,
completely false assumption, but it's amazing, right? Because there's this $30 trillion financial services industry that wants you to believe their agenda is the only way. And so, we've all, I mean, we've been, brought up like
yep,
listening to
yep.
this, everyone, employers, family members, everyone is saying that, hey, this is the right way to do it.
Yeah. And then I talk about another thing I remembered was when talk about portfolio, right? Um, Making sure that you are not all in stock market. And this, most of these people will say, oh yeah, I have only 100K in stock market. And I'm like, what about 401K? Oh, that's stock market. Yes, that is also stock market. It's tied to Wall Street. And oh yeah, I have now 400K in the 401K. And I don't know what it's up to, right? So
No,
a lot.
and yeah, people just keep looking at their quarterly statements, right? And then they say, but my employer's giving me 3%
Oh
match. That's
yeah,
free money.
I need free money. Yes.
Free money. Okay, well, you haven't done the complete calculation. And the
Yeah.
other thing I'll say on that as well, Alpesh, is that look, I don't have a crystal ball, okay, and I'm not a CPA or financial advisor, but I can reasonably suspect that taxes are going to go up in the future.
Yes. Yeah.
So when you're
Of course.
planning to take out that money in the next, 20, 30 years, and
Yeah.
look, think about it. So Alpesh, I don't know about you, but I don't really have a crystal ball, but the one thing that I'm pretty certain of is taxes are going to probably go up in the future. I mean, literally just today we hit the debt ceiling.
Yes.
And they're trying to figure out, how the US government is going to meet their obligations, right? And probably the most likely way to be able to do that is by raising taxes.
Yep. And we have Democrats, right?
True.
No, this was great discussion. I enjoyed a lot. Thank you so much for sharing all the golden nuggets. Are you ready for fire round?
Sure.
Would you be changing any business or investment strategy because of inflation or the impending recession?
Yeah, definitely on the commercial real estate side. I mean, look, we look at, I mean, multi-family syndications, for instance, are very asymmetric in nature, and we still believe in the fundamentals. But yes, we definitely looking based upon the debt markets and everything. They've been significantly impacted. So, really focusing in on that and how deals are structured right now.
Awesome. Favorite investment, real estate, or finance related book?
Oh, Cash Flow Quadrant by
Yes,
Kiyosaki.
that's my personal favorite as well. Any tool or website you recommend or you cannot live without?
Well, I could definitely live without email. It would be it would be
Uh,
really nice. That's a good question. I've got a lot of different things. Probably Evernote.
yes, it's a great app. Any advice for beginner investors?
Yeah, it's all about getting educated, right? And starting to learn and ask questions. And you have to have a growth mindset. You really want to be a lifelong learner, ask a lot of questions, surround yourself with best in class people and really level up. But the smarter you get, you take away the risk and it creates, more and more infinite opportunities.
That's awesome. How do you give back?
So I'd love to give back in the sense of really creating direct impact with our investors. So, we're always kind of creating value and doing a lot of creative problem solving, frankly, for our clients, right? As we architect different wealth plans for them and come up with different, solutions like, the oil and gas, right? To mitigate active income, different things like that. And then I'm also involved in some work around helping veterans that we believe in strongly.
It's awesome. How can my listeners reach out to you?
Appreciate that, Alpesh. Yeah, the best way, if you'd like a free copy of our ebook, you can get a copy at pantheoninvest.com/wealth-strategy. And that's where we have the holistic wealth strategy. So there's an ebook version there, and it's also on Amazon, holistic wealth strategy. And and also check out our podcast as well, the wealth strategy secrets of the ultra wealthy.
That's awesome. Thank you so much, Dave, for your time.
Thank you. Grateful, Alpesh.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!